Hi, and welcome to another episode of IC Data People. Our guest today is Stefania Di Bartolomeo. Stefania is the founder and CEO of Physis Investment. Physis leverages ESG data and analysis to help investors understand, track, and measure the impact of their investments. Prior to Physis, Stefania was an impact fund manager and an advisor to large institutional investors on ESG investing. Stefania, welcome to IC Data People.
Thank you, Evan. Super happy to be here today.
You are our first guest to actually focus specifically on sustainable investing. Can you explain to our audience exactly what ESG is and talk about the different types of data that investors can leverage to make sustainable investment decisions?
Wow, this is a big responsibility to be the first one to speak about ESG and sustainable investing. The first thing that I wanted to say that we use these terms almost if they mean the same thing, but they don't. I believe we should use the word sustainability as an umbrella term that identifies all the type of integration of extra financial information into an investment decision process. So think of sustainability as an umbrella terms. Under that, we have the so-called ethical investment, which is mostly a way to do not invest or divest because of ethical concept. For example, religious investors might not want to invest in anything that has to do with alcohol or tobacco or contraceptives. Those are specific set of data that are used to identify ethical investment screening. Then there is the big world of ESG that stands for environmental, social, and governance. Those are more specific information that we take at a corporate or an issuer level to identify risk and opportunities that do not simply stand inside the data of financial information. And then we have the concept of impact investing, which is a way to invest with the idea of generating positive return and positive financial return and sustainable and impact return. You also specified something in that question. What type of data do we offer to investors? And I mean, what type of data are being used today by investors that want to identify one of those strategies? Well, the so-called ESG is mostly been provided to investor as an ESG score, a way to say that Nike might have a score of 80 out of 100 based on a specific methodology. But there is an increased need to really see raw data behind the score, which can be how much CO2 emission actually Nike generated, or how many women Nike actually hired, or how much water was used or recycled by Nike. So as of today, this ESG score that has been pretty much a story until today, now is considered a story of the past, a data that people want to go above and beyond. And so we mostly specify in the world of sustainable finance into offering impact raw data. It's the next big thing in the world of sustainable finance.
Stefania, thanks for the overview. And I think you ended with a very interesting point that people used to look at ESG score. I think if you ask people about ESG 15 years ago, they wouldn't even know what that means. And today, they're trying to dive deeper and really understand what drives ESG. So my question is like, in the last few years, what have been the most significant changes, and how did it impact investors?
Thank you, Amir. This is such a great point. 15 years ago, people were not even talking about sustainable finance or ESG. And now everybody's discussing about this. And there is an important reason. We face so many challenges in the world, from having polluted cities to having microplastic in the ocean, to so many still inequalities in the society we live in. And in order to face all of this problem, we need to put money into companies and projects that can make a big change. And in order to assess in what companies to invest to make a change, you need extra financial information. We can call it ESG data or impact data. Again, difference mostly stands in the concept that ESG is a score, impact data, raw information. One of the biggest change that I have seen is number one, this new level of awareness. So we know we're facing problems and we know that finance investing in sustainable companies, it's one of the key to solve those problems. Second, next to awareness is this increase of disclosure. 5 years ago, we didn't even have access to this level of granularity and data provided by companies. In terms of all the extra financial information, companies were not going to report how much water they were recycling or how much plastic they might probably have used to produce a new pair of shoes. Now they do. So one of the most exciting thing is this capacity of company to disclose more and the capacity of investor to use this information to build advanced portfolios.
I want to take a step farther into this question. You know ESG inside out. What is the most powerful insight you've seen from this data recently?
Well, one of the most powerful things that I've seen happening in the last few days has been this capacity of companies to start reporting on extra financial information. So the moment a company starts reporting, for example, on how many women they hired and if they have gender pay gap in terms of salaries, they start becoming aware of what is happening inside the company and behind just financial metrics. And this is a great driver of change. The moment you start measuring, the moment you start disclosing, the moment you understand that probably something that you have done can be improved. So I have seen companies start disclosing information and start making improvement in their own strategy. And this, in my approach to life, that I think it's always important to look forward with a very positive attitude, means we're going to keep improving the way we run the business and the way companies generate an impact internally and in the society they operate.
So let's go a bit broader here. You also keep track of emerging data tools, things like large language models, GPT, and other data innovations in both the AI world and specifically in the ESG world. I'm curious about what you think are the most interesting or exciting new tools and technologies you've seen in the data world recently.
Well, all the natural language process and new models pretty much help simplify large data set in a language that everybody can understand. So if we think about a few years ago, all the big data sets were probably accessible and to people like you and I that we understand how to take advantage of large data set. Today, even an analyst that has been trained about how to advance portfolio construction can take advantage of a process where they can just input a question and get in one simple answer all the information they were looking for. So I really think we are more than identifying one simple tool. I believe that we are just at the beginning of this incredible transformation where new technology are providing a simplified way to access big data to people that might come from a different background than just big data. That and big data can be used by these people with a totally different mind approach. So let's think, for example, somebody that has an incredible background in social and so in social or environmental impact, but they don't have a strong, they don't know SQL, they don't know how to take advantage of large data set. With the new language models, they can easily access the information they need to then be actor of change. It's just the beginning of a fantastic process. I don't know where this is gonna go, but I really look forward to see in 5 years where all of the new technology that really simplify large data set will take us.
I think that with great power comes great responsibility in this kind of things, and using ChatGPT or OpenAI or other large language models with the ESG model, where two of those things are, I think, not defined yet, or there's not enough information to really create a kind of universal truth around both. How do you suggest people to kind of combine those two, or at this moment, what are the right prompts to ask? What are the right insights they could derive from this kind of combination? How do you suggest people actually create something out of those two?
Two aspects here. One is that, of course, everyone here is a little bit afraid of the generative use of AI. Because now with AI, we can create videos, audio, images that are fake and misleading. And in the wrong hands, this with the wrong intention, this can generally we don't know what they can generate. For example, we have seen the other day a fake image of an attack at Pentagon, what it can generate also in terms of Wall Street. And this is terrible. So we definitely need to figuring out a way to anticipate an ethical use of AI. So this is one aspect. The second one that you have touched base on is how we can use chat like ChatGPT with ESG information. Well, currently I've tested the solution. It doesn't have much of ESG information incorporated, but it will definitely be evolved in the next few years in a way that if you type a simple question, what is the company in the S&P 500 that has generated more jobs? Yeah, you probably will see it. Or what is the company that has been able to decrease CO2 emission in the most efficient way? Well, you will probably get the answer for that as well, which is fantastic. Again, this goes back to the idea: the more we can empower every day users to better understand what is going on besides just financial data, the more we can really empower people to make a positive change. So in that regard, I cannot really wait to see how natural language process and advancement in the solution to simplify large data set can enable people to advance also portfolio construction and invest more and more in sustainable companies.
So we've talked a lot about the evolution of ESG and where sustainable investing or impact investing has gone. Where's it going to go? What does the next 5 years look like as you kind of prognosticate and think about the future? Where do you see the landscape changing in the next 5 years?
Something is happening that is extremely exciting. There is a big demand for sustainability, starting from people buying sustainable product, willing to invest in sustainable companies, want to transform their 401k into a sustainable portfolio, but also from regulators. So regulators are seeing that this is a big necessity to have company disclose more information and investor be consistent with the way they claim they build portfolios. So I see that in the next few years, there's going to be this increased demand and the regulators coming with new regulation to improve the sustainable disclosure. So if before we were thinking that when we were investing, we were basing our investment decision mostly on financial information, in the coming years will be actually the opposite. All extra financial data will be even more, if not, it will be even more relevant than financial data in order to make an investment decision. And so the capacity of a company to really disclose their ESG data and be honest also in disclosing their ESG data would be key also in terms of generating financial performance.
Stefania, it was fantastic to have you giving us a bit of a lesson on not only ESG, but impact investing, sustainable investing, and really helping us understand where that fits into the landscape of how investors make decisions. Thank you so much for being a guest on IC Data People.
Thank you guys for having me.